In this tutorial, I am going to show you how you can trade the fading the breakout trading strategy, or the fake breakout trading strategy, or the liquidity sweep trading strategy, or the manipulation trading strategy, which personally I prefer to call the stop loss hunt trading strategy. This is an effective, powerful, and simple trading strategy which can help you to become a consistent, profitable trader in the market. At the end of this video, I promise you that your trading performances will change tremendously if you can apply this trading strategy. The good news about this trading strategy is you can apply this trading strategy to trade any type of market, maybe it's forex, crypto, stocks, index, or commodity. Therefore, in this tutorial, I will make use of the cutting for our chart, right? So let's get it started. The reason why I wished to use cutting in this tutorial is based on the fact that I implemented this same trading strategy I want to teach you to take a trade on this asset, and I shared these trading setups and signals with my VIP members, students. So if you are interested, refer to the description of this video on how you can become a member, on how you can enroll for the mentorship programs or the trading signal packages. So first, let's move our chart. I have the pattern right here. No, you have to understand this pattern. This is a pattern right here. So this pattern right here is what we call the manipulation trading strategy. Some call it fading the breakout, some call it fade breakout, some call it liquidity sweep. Personally, I love calling it the stop loss hunt trading strategy. Stop loss hunt trading strategy. So it means a lot of stop losses were at this medium, price cut them out, and there are a lot of traders wanted to short right here, price went against their stop loss. So this concept right here is to hunt for stop loss in the market, right? So this pattern can assist in a downtrend. It can also assist in an uptrend, but in this tutorial I am going to show you the downtrend format. So if you are interested in the uptrend format, then put a comment down, I am interested, then I will tag you in the next part of this trading strategy. So let's break down this trading concept right here. We can see right here, price rally to a downtrend. At point A, price formed a bullish swings all the way down again to point B, all the way up again, and then we have it down to point C, which means price turned this level of A, B, C to a support level. At point B right here, we have a double bottom. At point C, we had a triple bottom, and then the same thing goes at the extremity of the I swing, which is resistance, resistance, resistance. This technically means price was going through a consolidation medium. So traders already know at A, B, C, we have a support. Those who bought at C right here made profit. Those who bought at B made profit, and those who sell from the top made profit. Now price got back to point D, and a lot of traders wanted to repeat the price actions which formed at C, B, and A. So a lot of traders right there went for a long position so that they can take this trade all the way up to this resistance structure once again. But at point D, price failed, and then a lot of traders who wanted to buy were being disappointed, whereby price dipped down and they broke the support. And those traders who wanted to sell initiated a selling position, and those who first initiated a buy position right here have no option than to close their buying position and to join the sellers in this downtrend. So as the market proceeded all the way down, price rallied up again. You know, based on technical analysis, you will hear this saying which stated, do not take the first breakout. So some patient traders in this market didn't take the first breakout of point D. Instead, they waited for price to test this broken support with the ideology that a broken support should turn into a new resistance for price, which is technically right. So after the price tested this broken support again, more traders got in right here to initiate a selling positions, whereby those who missed the first sell right here got in at the point E with the aim of going in a downtrend. And then instead of price going in a downtrend, price closed above this broken key level, thereby turning it into what we call manipulation liquidity sweep, fading breakout, or fake breakout. But the reason why I prefer to call the actions which occurs at this medium right here as a stop loss on trading strategy is based on the fact that a lot of stop losses were being set at this medium of D and E. Remember, the first sellers at point D set their stop loss above the structure right here. You can see that. And the patient traders who wanted to sell at point E as well set their stop loss above so that they can continue the downtrend down, right? But price ended failing both sellers at point D and point E. So this was the major reason I prefer to call it stop loss on. So after we got a bullish surge right there, of course there has to be a liquidity, a strong liquidity in the market, and this is one of the reasons some traders prefer to call it liquidity sweep. All right, so there must be liquidity to overcome the forces of the selling pressure in this medium right here, which means there must be increase in the balance between the buyers and the sellers. That means the increase has to come in whereby the buyers have to exercise more forces to overcome the forces of the sellers. So this is one of the reasons we can see a surge or an increase in bullish volume right there. So as a patient trader, don't jump in right there. Instead of jumping in, you still have to wait for a pushback, and the pushback at point F is what I personally called revalidation. The breakout of price above point E as a bullish signal is the confirmation, but don't take the confirmation. Instead, wait for a revalidation entry. So after the retest at point F, that is our revalidation. But before we can take this revalidation, the next step or the final step is to move to the lower time frame, which is lower than the time frame in which this manipulation setup is forming or has been formed. So as you can see right here, this is the 4-hour chart, which means this is an intraday strategy setup or trading setup. So what we need to do right now is to move to the 15-minute chart. So if you see this pattern on the day chart, before you can trade it, after this pattern has formed on the day chart, move to the 1-hour chart. If you see this pattern on the weekly chart, before you trade it, move to the 4-hour chart. And before you move to the lower time frame, you have to see a strong bullish surge right here. Alternatively, if you want to make an early entry, then go to the lower time frame. So in this tutorial, since we are using the 4-hour chart, we have to move to the 15-minute chart. So moving to the 15-minute chart, the final step is to blend this setup at F with a chart pattern. Chart patterns like double bottom are so much effective, or what we call the inverted head and shoulder are so much effective. So these are the two patterns I would like to add right there. As well, you can look out for pattern like a bullish flag. Bullish flag are also powerful, reliable in this type of point F, which I call revalidation. Now let's check what we have on the price chart so that we can see how we can trade this pattern on a live real chart. Remember, this was the resistance and then support. Price bounced through this medium. We had our first breakout. Price got to this level. A lot of traders wanted to sell right here. Some sold right here. Some wanted to buy right here. So a lot of stop losses were being hit right here for those who want to buy. Those who want to sell right here had their stop loss above this level, and those who want to sell right here had their stop loss above. Price cut out their stop loss. We had the retest. Now let's move to the 15-minute chart so that we can see this retest. So on the 15-minute chart right here, this is what we have. On the 15-minute chart, you can see that. So the pattern we had on the 15-minute chart was what I call the bullish pennant. You can see that we have the bullish pennant, we have the descending trend line, and we have a horizontal line. You can see that. So I can eliminate this rectangular tool right here. As you can see right here, we had our bullish pennant. Price gravitated through this medium before we had a gap breakout and a strong bullish breakout on the 15-minute chart. So this was the major reason why I went long on this pattern setup, and I sent these trading signals to traders in my community, and then we rode the trend upward to almost 2 risk to reward ratio. And presently right now, at the time of the creation of this video, this pattern is still playing out, and you can see double bottom still continue the continuation of this bull rally. So traders, this is how to trade the fading the breakout trading strategy, fake breakout trading strategy, manipulation trading strategy, liquidity sweep trading strategy, or stop loss hunt trading strategy. In the next section of this tutorial, I will show you how to implement this trading strategy to trade the reversal of an uptrend to a downtrend. If you found this tutorial helpful, do not forget to like, share, put a comment down, and subscribe to this YouTube channel. See you in the next one. Peace.